What's going on, everyone? I know it's been a very long time since my last upload. Haven't been able to stay very consistent on uploading to YouTube. Been focused on my current students, my own personal trading, and many businesses outside of Forex. But today we are going to be going over how you can get insane risk to reward ratios with these institutional concepts that I've been teaching you. I spent a lot of time focusing on the 1 minute chart, the 30-second chart, and up to the 5 minute, getting these insane risk to reward ratios. That's what me and all of my students have been focusing on and trading together. Quick little update on the trading setup. If you haven't seen, we added the 2 monitors and same screen, absolutely loving it. Got that Pop Smoke playing and had to cop those Dior's. Rest in peace, Pop Smoke. But that is the trading setup. That's how we've been trading. Let's go ahead and hop into these charts. Okay, so how we get these really big risk to reward ratio trades. We're still using the institutional concept that I teach everyone. So if you haven't watched my other videos and learned the sniper and kill shot yet, or taken my course, make sure you go watch those before this video. But what we're doing is we're still using the institutional concept. What we're gonna do is break it down to the very low time frames, like the 1 minute, the 30-second, the 3 minute, the 5 minute, etc. And we're using it alongside the higher time frame analysis. So a lot of people, when they trade the higher time frames, they have a bigger stop loss with a bigger take profit. When they're on the lower time frames, they usually have a smaller stop loss, smaller take profit. So if we were trading, on the higher time frame, they would be looking for a buy, with a big stop loss and a big take profit, and then obviously a smaller stop loss, smaller take profit on the lower time frames. We're gonna put all of that together with the institutional concept. So for this example on GBP JPY, and I know a lot of y'all are gonna say that, oh, you're using the replay tool, you already knew this example was gonna happen. Yes, I knew this trade is gonna happen. I took this trade with my students. If you don't believe me, you can get my live sessions. We do this over and over and over again every week together. The only way I can teach on YouTube and show you all this is by back testing. So yes, I knew this was gonna play out. There's always the haters that say, oh, it doesn't work, you're just showing it, based on old price. But you can believe what you want. We do this all the time in the group, but y'all wanted a YouTube video, so here we are. So again, the sniper setup is going to be that aggressive move against the trend to grab liquidity, and then engulfing candle the opposite direction of where the liquidity was grabbed, and then we look for the entry. So obviously GBP JPY is bullish here, and then you can see this little trend, right? Or little wedge, whatever retail pattern you want to call this. And you see this down move through these equal lows. So this is going to be a down move through the lows. This is going to entice retail traders to sell and hit sell stops under these lows. So retail traders selling, institutions buying, right? They're picking up the buy side of the order. So this is our sniper, okay? Y'all should all know that based on my previous videos. And you would be buying here, right? You buy the retest. And if you're trading it here on the higher time frames, your stop loss would go below the low, and then we would be targeting up here. So let's just say we were going to target 300 pips on this trade. Okay, 300 pips. So still at 1 to 6.7 risk to reward ratio, right? Which is really good. You'd probably round this to 50 pips. So let's just round all this together. So 135.75, and this would be your trade setup on the higher time frame. And this is a valid trade. That's a beautiful trade. 1 to 6 risk to reward ratio, that is great, okay? What we're gonna implement now though, to get these insane risk to reward ratios that me and the students have been getting, is instead of just buying this retest right here, when price gets here on the lower time frames, And I'm talking, 5 minute, 3 minute, 1 minute, 30-second, etc. When price gets here, instead of having a buy limit here or just buying, we're going to wait for another institutional setup on that lower time frame. So you can see here, downward to the lows, bullish engulfing, buy the retest, that's valid. But when price gets right here, not inside here, but right here in real time, we want to see another equal lows, down move to the lows, bullish engulfing, buy the retest, okay? So keep that in mind. We are going to go to the lower time frame right here using the replay tool, and I will show you the buy entry that you should be looking for, okay? And keep in mind, we are still targeting that same take profit. So, like a lot of scalpers, they usually on the lower time frames, they will have a smaller target. We're still targeting that higher time frame analysis. We're just looking for that confirmation entry, and that will help us move our stop loss up. So, all right, so once you get to the lower time frame, you want to start looking for that confirmation entry right here. Okay, so instead of just trading blind into it and having a buy limit, you see all this room for drawdown? That's what we're going to fix. Like I said, 1 to risk to reward ratio is great, but we want to get, those really, really, really big risk to reward ratios. So what you want to do is start waiting for price to consolidate, and then we want to see a down move to the lows, bullish engulfing, okay? So we're just going to let price play out a little bit, and then what you would be looking for is in real time, you see how all these lows are starting to form? We want to see a down move to the low, bullish engulfing, okay? So just let it go. Now there's a bullish engulfing here, right? But this wasn't a down move to the lows, right? It didn't really grab liquidity, right? It's just a little bullish engulfing, consolidation. So wouldn't want to enter there. We would want to start looking for price to now take out these lows, which is still all these lows, right? It's just consolidation. We want to see down move to the low, bullish engulfing. If you don't really see anything on the 5 minute, you can step down to the 1 minute. Again, all we're looking for is down move to the low, bullish engulfing. So let's go to the 1 minute and start looking around, okay? Let price play out. And again, aggressive move, right? Not just a little baby bullish engulfing. We want to see a huge down move or pretty aggressive move, and then aggressive move back the opposite direction, okay? So price just kind of ranging. And this is what also is going to help is instead of just buying and being in drawdown, right, you actually get to usually be right in profit because you're going to have a small stop loss. So we will keep watching. Remember, we want to see down move through these lows. We don't really see anything yet. Okay, right there. Do you see how this is down move through all the lows? Right, look, here's the main low, 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 low. Down move to the low, big bullish engulfing, right? This is going to be our confirmation entry. Same thing on the higher time frame, right? We had a 4-hour down move through the lows, bullish engulfing. So now instead of buying here, we are going to buy here. And the beautiful thing about this is now we get to move our stop loss. Instead of being way down there, let me adjust it a little bit more so we can find it. There we go. Instead of being way down here, we're going to move this all the way up. And we're going to put it below the low. Look at this risk to reward ratio, 1 to 121. Now let's go look at that 1 minute trade. Okay. So how this works is we now have a 1 minute institutional setup, which is our sniper, right? Down move to the lows, bullish engulfing at that 4-hour setup. So we're not just looking for these setups on the 4-hour. We're not just looking for these setups on the 1 minute. We are looking for the 1 minute or lower time frame setups at the 4-hour or higher time frame analysis setup. One thing I do want to add is you need a broker with really low spreads to do this. You can see this is only a 3 pip stop loss. The broker I'm using is Prosperity Forex. I'll put the link in the description. You can use their pro pairs, and all of the spreads are to the micro pip. So that's the broker I've been using. Absolutely loving them. No deposit fees, no withdrawal fees. Literally, you'll get your withdrawals within hours. Really, really good broker. Again, link will be in the description. But let's see how this trade plays out. So now, like I said, we're putting our stop loss below this low because this is our new setup. So let's scoot this over. Okay, so you can see we're risking. We can just round it to 3 pips. That's fine. 3 pips stop loss. And we're still targeting the same higher time frame take profit, which is up here, 138.75. So you can see we're going for 300 pips there, and our stop loss is only 3 pips. You can see how we've used the same institutional setups that I've been teaching you. We are now just using the lower time frame setups at that higher time frame entry, okay? And again, you're not gonna buy now, you're buying the retest. And you don't wanna use a pending order. Once price retests right here, you just wanna click buy, okay? So right here, you see how it's a down move through the equal lows, immediately a bullish engulfing, right? There's no ranging, grab liquidity, bullish engulfing, buy the retest. So we would have bought right here, okay? You can see price just rejecting our entry. There's your retest. So trade is already in profit. And with this, you're not going to move stop loss to break even. This is only a few pips. So, you know, on the higher time frames, you can move stop loss to break even after 20, 30 pips. Just let this ride up. And then once it's, you know, 15, 20 pips in profit, then make it risk-free. Okay. So you can see price comes back, almost hit stop loss, but didn't, right? That low is still holding. And then price will go our direction, okay? And obviously y'all saw it hits on the higher time frame. Before we go look at that though, I want to, I guess we can go look now. Okay, reset. All right, and that's where the take profit was hit. You can see, look how small, three pip stop loss, 300 and about 5 pip take profit. Huge risk to ratio. Where I was actually looking at this entry though, let's check this out. So on the 1 minute, let's go back here. Okay. So here is the trade I just showed you. And you can even go to the 30-second chart. Look at this, 30 seconds. Let's go back. Okay. Now look at this, those same equal lows. Look at this, down move to the low, big bullish engulfing. We could have even brought it all the way down to here. Again, buy the retest. Look at that entry, 30-second chart. There's your buy right there. Okay, so let's move this. We're gonna put this right on there, right there. Stop loss goes below the low, and you can round it to the nearest pip. So let me zoom out a little bit. See, that's 1.4 pips. We can make it 2 though, 1.5 or 2 pips. I would just go 2 pips to be safe, but you can see the same concept I've been teaching you over and over and over. I know I don't post many videos, but if you're on my live sessions, you know, we're doing this every Tuesday, Wednesday, Thursday together. Y'all can check that out. I'll put that in the description as well. But just look at the concept. So go, if you look at all my old videos, this is exactly what I teach you. Equal lows, down move to the lows, big bullish engulfing candle, you buy the retest. Boom. This same thing on the 30-second, the 1 minute, the 5 minute is the same thing I've been teaching you on the higher time frame. Again, all we're doing is adding the lower time frame to the higher time frame setup. So how you would do it is you would analyze the 1 hour, 2 hour, 3 hour, 4 hour daily. Once you have your higher time frame analysis, you then, instead of just buying at that higher time frame entry, you go to the lower time frame, and when price gets there, you're just waiting for that confirmation. So instead of just buying and then being in and out of profit, price ranging, you are just entering on the lower time frame. So this is the trade right here, would have been your entry, and we can round this all up. So let's just say we entered at 135.69. Actually 69, my bad. All right, 69. And then remember, we were targeting 138.75. And our stop loss is going to be 2 pips. So 153 risk to reward ratio versus that higher time frame, which was a 1-to-6. 1-to-6 is great, but look at that, 153. And how that's going to play a huge factor is, if we go to Myforexbook, you can go to Forex calculators here. And before we do some math, we're going to see what the current price is. So I'm going to go to pip calculator. I think it's like 9.6 right now. So we're trading this setups on GBP JPY. So right here, okay, so it's 9.4. So let's just say it's $9.45, okay? So as you know, not every currency like Euro USD is $10 a pip on a standard. This is 9.45. So we're gonna do some math, and we're gonna do it right here. Let's do a text. So GJ is trading at $9. Oops, if I could type right. $9.45 per standard. Okay. And now we're going to go to position size calculator. So if we were trading the higher time frame, right, we would have had a 50 pip stop loss. And let's just risk 3% of our account. And let's say we have 5,000 in our account, okay? So we calculate it, we would be trading a 0.32 lot size, right? Risking $150. So keep this in mind, the lot size, right? We're still risking 3% of our 5,000. But if we change this to a 2 pip stop loss, watch the lot size. Now we're trading about 8 lots, right? 8 lots instead of, what was it, 0.03? I don't even remember what it just was. That is the difference of how you're going to make a lot of money trading. Still risking the same exact amount of money. You see that? So let's pull out our calculator. Actually, let's go 7. All right, we're just gonna do 8 lots. And go back here. So we would be trading 8 lots, risking, what was it, 150 bucks? Yep, $150. 8 lots, risking $150. And now the fun part, our take profit at 300 pips. Let's get our calculator out now. Let's see. You're not going to be able to see this, but let me do a quick calculation. So we have price trading at $9.45 per lot. So we're going to multiply that by 8 because we're trading 8 standards, right? So that is 75.6. Now we are going to times that by 300 pips. And that trade, you would have made $22,680. $22,680. Huge, huge, huge profits.